traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. Folks, I posted the chart here in the Tiger Den, and you can see, we've had this big ABCD in progress here in the S&P from yesterday. Looks like our target is going to be up about another 8 or 9 points from where we are right now, right around that 39.43. But I thought I'd bring to your attention something that just happened here. It probably doesn't mean very much, but I wanted to bring it to your attention anyway because I follow these numbers religiously, I guess. But here is the picture of the Dow Jones Industrial Average. And if you'll notice here, this is an hourly chart. And as you can see now, what we've done here is we have just made a 382 retracement of the February high. I mean, that's a pretty significant number. When you look at some of these other things that we're looking at, it's going to be real interesting. Stan Harley will be our guest at the break. I want to bring to your attention a couple other charts. Someone asked yesterday, how did I know that the market was going to explode when we were on the air? And I said, if it got above 39.52, for God's sake, don't be short. I just wanted to show you this chart here. I believe I said 39.62. Sorry for that. Let's get this up. I wanted to show you here what's happened because I missed something really big yesterday as a trader, and I was letting the market influence me a little bit. But look at the beautiful 3 drive to a bottom pattern, folks. I mean, this thing is just so spectacular. And it measured, believe it or not, to 39.24, and the low was 39.25. And look what we've done here. We've taken all of this out. This is where it exploded. When we were on the air, if you remember, I said, look out right now. I said, do not be short that market if it gets above 39.52, because if it did, and I want to bring it up here to show you what it looks like. We were watching the AI program, and I'll give you a little bit of heads up what's going on with that too. But here was what we were looking at yesterday, okay? This is where we were. We were closing right now. We were done here is when the market took off here. This is when the show ended, right at 2 o'clock. And as you can see, once we cleared that, folks, we were off to the races. And you can see we've continued to go higher and higher and higher. So that's the way things are going today anyway. But let's take a quick look at something else that was happening at that time. And this is the thing that I thought was the most important of all, and I want to get this up here and show you. This is the Treasury note chart, folks. Let me get this up here. This is primarily why I think the market is rallying, because interest rates have backed off substantially. There is the exact 78% retracement on the Treasury notes yesterday, folks. It went 2 pips below that. It's rallied over $1,000 in the Treasury notes. That means rates have started to come down, i.e., stocks usually start to rise during that time. But this line right here, you can see that line going way back here from last year. That's a 20-month line, folks. And that means that if that is a bottom, this thing could act as a fulcrum and really move to the upside. I know no one is expecting interest rates to start to back off, but by golly, this is what they're doing. And all you hear in Bloomberg and CNBC is the further interest rate increases that are coming. And, folks, maybe that's true, and maybe not. I don't know. I'm just telling you that we had a really important bottom in that thing yesterday, and it was very, very important. Now, let's take a look here at something else, and this has not been violated, by the way. If you remember yesterday, I said the trade of the day was to sell the ABCD pattern in the let's get this darn thing up here, in the Japanese yen versus the dollar. In other words, sell the dollar against the yen, okay? And there we go. Trade of the year, natural gas. It's starting to act like it, Mikey, but we'll have to wait and see if that's going to be the case. I'm waiting for a pullback. I'll probably be waiting till the end of July. But you'll notice the ABCD structures that we had on that took us up to the area of 137.10. That the high was 137.10. And if you look at this, on a long-term, weekly chart, which we're going to do right here, so bear with me 1 second. And oh dear, disappear on me again. Oh, shut the front door and raise the rent. I know I got it here somewhere. Boy, oh boy, this is, I just had it ready to go and it disappears on me. Here it is right here. I mark it too. All right, here's where we are. This is where we were last night. We got up to that 137 and change. Again, that's the 382 on the weekly. Again, this is money moving. Remember, we had a high here at 151. We come down, we rally up to the 382 on the weekly, and that's all we've been able to do. This is telling us that something is happening in the markets that are making these darn things move. So we'll remind ourselves that that's what's going on. Boy, we're very close to our 40-43 level in the S&P, folks. The Dow Jones has now gone above the level by about 20 points in the Dow, above the 382. So watch this. Very, very, very informative, folks. If you like ABCD patterns, and we do, here's what we've been waiting for since early this morning. Let's get this up here to take a quick look at it. I just updated it a little while ago so that you'd be able to see it, but we're getting very, very close to it right now. Whether it's going to stop from here, I don't know, but we've cleaned out all the stops here from the last few days, so everything is beginning to look like it's going to be, really, really rosy. If you look at it on a long-term daily, as you just saw with the the Dow Jones making the 382 retrace. Remember the Dow, sorry, folks, with all the snow and stuff we've had here, the Palo Verde trees are going wacko on me, and that's the reasoning for the raspy voice here. But that's what we're paying attention to now on that particular situation. The fact, and I'll do these updated things over the weekend, of course, but this may be the start of a big move to the upside. It's certainly possible. Remember how bullish I was at 39.45 in the S&P, and then it went below that, and this is what I got caught in the trap. I saw this pattern after we were on the air. When I saw that happen, that's where I realized that I knew something was wrong, because this is where I was short. And I said, oh my God, look at this big ABCD. That took 5 days to complete. Hello, operator. That's not a bearish pattern. That's a bullish pattern. And of course, we blew off the tops up here. We're let's see, how did we get to 30? We're at 40, 39 and change. Where are we at now? 39.43. That's about a 61% retracement of that whole move is what that is. So let's watch that for an interesting one, because that's going to be very, very close to the whole Gamilla here as we're looking at it. Now, early this morning, and this is what I was preparing you for, because it showed that we were going to be relatively bullish. We're going to take a little break here. 877-927-6648.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kegstad's Tiger Forex Report. Teddy Kegstad breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, what I've done now is I posted the AI, which gives a rough idea what the market's supposed to do during the day. What I wanted to point out to you, though, is if you would look at one thing and oh dear, hold on just a second. This is where you want to be watching. You see this low that we made here right before this market took off? That was an exact 382 of the early morning low. Look at that. It's exactly 382. Now, if you want to have some fun, you see this little number right here? Go back and look to see where that was off of the previous low. I'm not going to do that because that takes all the fun out of it. But look what happened here. Now look what the forecast was. Now I had this forecast early this morning. Look at the high of the day here, folks. 40.50. And guess what? That's what we got to, 40.50. 40.40. 40.40 was a number we were looking at. I think with the ABCD measures to 40.43. Whether that's close enough or not, I don't really know. What I was watching from a trading perspective was this right here, because this was earlier now, and all I'm doing now is expanding out. You'll be able to see some of these. The reason why I'm bringing this to your attention, folks, is I'm trying to put as many things together that I can for trading. And look, now you see the 382 retracement that we made right here? You see how this one here was a 382 of the number way back here, and it all measures up here to 429 on just on this pattern. But remember, 4040 was the AI's idea of what's going on. And all that's doing is taking a whole bunch of numbers and looking at them, what's happened in the previous day when the market starts to move. That's all it is. Now, those of you that are going to come to the day trading class on March the 8th, I'm going to give 30 days of the AI to you free. You're going to get gold, crude oil, treasury bonds, and the E-mini S&P or the Dow, one of those. Those are the ones. And then if natural gas looks interesting, we're going to do natural gas. Plus, you're going to get my book, Our Artificial Intelligence, and I will be happy to, include that, with the program. Let's take a look at a couple other markets. This was a really good one today, folks. It could have been fabulous, but let me show you this. This happened to be this is one of our favorite 135 patterns, and when you're trading 15-minute charts, it gives you a really good place to entry. You'll notice here on this down, I didn't draw the 135. There's 1, there's 3, and there's 5. That was exact 382, by the way. The market dropped $2,200 here, folks, in 15, 20 minutes, and look how fast it came back. You see the high right here? When the market corrects more than 80% of this move right here. John Hill called that the yum trade. And by golly, you can see yum because it jumped off the top of this chart, got all the way up to 79.50 was the last I was seeing. And so being long the crude oil was the right place to do it. But if you look at crude oil just on the hourly chart, look at the crude oil on the hourly chart today, folks, because the low that it made, and you're going to like this if you like Fibonacci numbers, the low that it made today, hello operator, guess what that is, folks? You want to take a guess? Bada bing, bada boom. Look at these higher bottoms. 1, 2, 3. This one, okay, was exactly 618, and this one was exactly 50%. And now we're on our way, getting ready to make a huge ABCD way up here above 81.82. And if you remember, we had Mike Moore on the show this week, I believe on Tuesday. Yeah, on Tuesday, and Mike said that it certainly looks like we're going to see an 80 handle very, very shortly in the crude oil, and he's certainly right on that one. And by the way, we will have Mike on at the end of next week, I think next Friday, trying to get Mike to be our guest, because he's done some really good things that look, really, really interesting with these things. Now, someone asked me the question, what of all the things that I talk about, what do I think is the most important thing that's happened this week? The most important thing that's happened this week was that ABCD in the S&P, but here is the one that's even bigger than that, and that is the huge number that we had here on the Treasury notes. The fact that we went there and hit it right on the money, and it went just a tiny bit, I think 2 pips below, and it's had a $1,000 move is a lot in interest rates, folks. So that's what. Now, will that hold? I don't know, but nobody else does either. So all I'm trying to do is say, where can I find something that will give me an idea of where something is going to happen? The thing that I had some really, really rotten computer things happening yesterday, but I want to post this chart on the Japanese yen too, because this is what we were looking at yesterday, and of course it went up and made the target here last night, and then backed off, well over $1,200. So that was a pretty nice move. And there's another one you got to watch it for this coming week. And it is just setting here at a really incredible spot. This is those of you that like to trade soybeans and like harmonics, and these are some of the things that I like to talk about. And you'll see here's where we are. There's the May soybeans. Look at this move that we had right here, folks. Okay, look at this move down. Look at this move up. Stopped exactly at the 61% retracement. Now it's only got a 4-cent profit in it, but look at this. This is absolutely perfect. And look at the 135 pattern. We happen to be short that puppy here in the soybean oil all the way down, and then went long here, and believe it or not, got stopped out at our break-even point, and then it took off by about $1,000. But sometimes you have to do that to play the game. But anyway, this is what's happening to soybeans. You got to watch this for Monday. This could be the trade of the day for Monday, because you've got a perfect relationship here. This one here happens to be, you see, it's a 61% one of this one. Okay, this is going to be 78% of this one. So that's why you got that's a 135 pattern. 135, very, very interesting. So let's remind ourselves that we're looking at. Okay, hold on now. Another question. Someone is asking about the Treasury bonds. And the Treasury bonds did pretty much the same thing as the notes, except the notes, they're not as volatile as the Treasury bonds. So what happens is it makes it a little different. And one other question, I mentioned yesterday about what happened at the Chicago Mercantile Exchange back in 1983 up in Barry Lynn's office, for Lynn Waldock. And it was Ruth Miller that told me, it wasn't my aunt, it was Ruth Miller that told me about woolly caterpillars were going to be all over the barn, and that meant there was going to be a drought that year. And there was it wasn't the Wall Street Journal, it was the Chicago Tribune, Byron had to remind me of all this stuff, but he remembered it, and we started laughing about it. But and he said, "Well, what do you think?" And so the guy called Ruth, and in the Wall Street, the Chicago Tribune, the next day in the section for commodities, there was a whole segment there about woolly caterpillars and the Farmer Trader's Almanac and a drought. And by gosh, in 1983, they had a drought. So that was something that happened. We got a big kick out of it, but. Boy, after all, do you realize how many years that's been, folks? That's been 40 years. Shut the front door and raise the rent. We got to take a break here because we got to pay some bills for our good friend, Tommy O'Brien and his group. By the way, folks, Stan Harley will be our guest today in just a few minutes. And then on Monday, we've got Bill Meridian, and Bill will be doing most of the show because he's got some great charts for us to see. 877-927-6648.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metal sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Okay, we're back, folks, and I believe we have Stan Harley of the Harley Stock Market Letter on the line. Stan, are you there, my friend?
Hello, Larry. I am indeed.
You're not going to believe it, buddy. I had 2 inches of snow in my patio and in the front yard yesterday. And the mountains are still covered with it, but boy, it's cold. It's only 49 here today, here at noon. I mean, that's just hard to believe. This has never been this cold in March here in the desert. I mean, this is something. But they don't want to hear that. They want to hear what's going on. Tell us what we're looking at on that first chart, which I believe is the New York Stock Exchange Index.
Absolutely. I'm going to pull it up right now.
Okay. Looks like you got a high about May or something, it looks like.
Let's see here.
I posted it in the room so the folks can see it already, but if you could do it, that would be even better because you can...
there we go. We're on my screen now.
There you go. Fire away, my friend.
There we go. The first chart, Larry, is the New York Composite Index. Mm-hmm. And this goes back a little more than 5 years. And what I've done with vertical lines is I've shown the dominant highs since January of 2018. There was one in January 2018, another one in early 2020, another one in January of last year. And then we had an important low in October of last year. And by putting this information into a spreadsheet, doing what's called regression analysis, I found there's a cycle here spanning about 103 weeks with a standard deviation of 2.77 weeks. And it picks out those highs and the October low exceptionally well. If the pattern continues and we get a reversal at the 0.618 Fibonacci ratio point, the regression analysis points to the April 7th, 2023 time period, just a little bit over a month from now. And I think it's probably going to be a high.
Stan, we got a question from one of our listeners from Kansas, and he's asking, he's not really familiar with what regression analysis is. Could you give him a 2-minute class on it to let him know what it really is?
Yes. Regression analysis is a mathematical technique that data analysts, statisticians employ, aerospace engineers like myself. What we want to do is try to find the best fit to a data series. And that best fit can be modeled in linear fashion, or it can be modeled in a multiple variable fashion. Most of what I do is linear. So when I look at a data plot, then I find the least squares best fit to the data series, and that's what I'm doing here. Maybe in a future show, I'll show the actual number crunching, but what the program does is it finds the best mathematical fit to the data series. And then I can project that information into the future and look at a potential change in trend date. And that's what I've done here. And I do that a lot in my work.
Wow.
The New York Composite, by the way, right now is barely 10% from an all-time high.
It's hard to believe, isn't it?
Over the next 5 weeks, 6 weeks, there's a possibility the New York comp might eke out just a token new high. I think that's possible. That's not a forecast, but it's very, very plausible nonetheless.
Now, the New York Stock Exchange Index is important because that's the one that they value mutual funds and stuff, isn't it? Isn't that the...
Yes, yes. And it's the broadest measure of stock market activity. Yeah. And among all the what I call the big five indices, and for me, the big five are the Dow Industrials, the Dow Transports, the S&P 500, the NASDAQ Composite, and the New York Composite. Those 5 indices I call the big 5. And in any measured move, either up or down, I'm looking for either confirmation or divergences. And at important pivotal turns, we tend to see one or more of the big components that comprise the big 5 fall off the new high list or the new low list. And I'll address that here in a couple of charts in further detail. Here's another index that keeps me on the bullish side of things. This is the United Kingdom FTSE 100 index. And surprisingly, the U.S. financial media rarely, if ever, mentions this, but the FTSE just went to a new all-time high. And generally speaking, over time, the U.S. and U.K. markets tend to dance together. They tend to make their highs and lows on, if not the same day, within a day or two of each other. Now, the amplitudes might vary, but the dates of the highs and the lows very, very frequently line up within a day or two of each other. What I've done here is I've gone back about 8 years, and I've marked the important highs and lows and found a very interesting Fibonacci pattern. And I've dumped this data also into a spreadsheet, done a regression analysis, and assuming the pattern continues, it points to a potential trend change for the FTSE in the vicinity of the week of April 7th, which, oh my gosh, using different highs and lows for the New York Composite Index, I came up with exactly the same day. So I've got the New York Composite and I've got the UK FTSE suggesting the potential for a trend change right at the same time. So that's interesting. Let's file that one away for right now.
Well, I'm opening the envelope now, and it says the week of April the 7th. Is that correct?
Well, that's on the weekly charts, and it can have some variance. The standard deviation is 2.77 weeks. So now I want to kind of refine the analysis down to the daily charts, and that's what I've done here in the next several charts that we're going to go through. Here's a chart of the Dow Jones Industrials, and I've shared this with you and the viewers in the past. And the market has had a tendency to make important highs nominally every just about 80 trading days, 79.6, and there's some Fibonacci math that goes into that. But approximately every 80 trading days, plus or minus, we've seen important highs on the charts. And the last one occurred using the Dow chart, December 13th, project forward in time, and it's due once again right around April 12th, plus or minus, which, oh, by the way, is in line with my analysis of the New York Composite and in line with the analysis of the United Kingdom FTSE 100. So file that one away.
Well, I'm going to go with April the 17th. That's the birthday of both J.P. Morgan and Arch Crawford. That time of April is certainly. Stan, have you ever been to New York to the J.P. Morgan Museum? If you're ever there, you really should. It's right off of 42nd Street. But the most beautiful part is his library. It's the size of a small gymnasium, filled with books. But the ceiling is a celestial ceiling. And a private elevator opened over his birth sign, April 17th. I mean, he was really into the astrology, as you know, and he had the largest collection of Bibles in the world. Even the Smithsonian didn't have as many as he did. But it's an incredible place to go to visit. It's a museum. You can get tickets to go see it. But you talk about the lifestyle back in those days. I mean, holy moly, guacamole! That's really something to see, that library. You probably go online and look at it, but it's really spectacular. I didn't mean to take your time. But we got a break coming. We got a break coming up.
Yeah, I know. 39 after we have a break. I know. So we have about 2 minutes.
So go right ahead.
I was not aware of that museum in New York. Thank you for bringing it to my attention. I'm just about 70 miles south of New York City here. So next time up to the city, I'll take a visit.
Here comes the commercial, my friend. Stay with us, and we'll be right back with Stan Harley, the Harley Stock Market. I'll shut up, Stan, on the next segment. Okay.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, we're back, folks, speaking with Stan Harley, the Harley Stock Market Letter. Please continue, my friend.
Absolutely, Larry. I'll go back to my charts again. This next chart, Larry, is the S&P 500. And as you know, I'm a big proponent of the Lucas number series. A lot of market technicians I know are very familiar with the Fibonacci numbers and their associated ratios, and I know you use them a lot in your work. You use more of the ratios than the absolute numbers. But there are a couple other number series that I'm well aware of. One's the Lucas number series, and the other is the Fibonacci series. I find among those three, the Lucas numbers and defining time counts between lows to lows and highs to highs to be far more important. And I use them in my work extensively.
Can I ask you a question? I have a question, yes. There's a gentleman up in Scottsdale area, Jeff Greenblatt, that works on Lucas numbers. I had him on the show once a few years ago, but he never has come back. Do you know him by any chance?
I do not know that name. And I used to live in Scottsdale before I moved.
Yes, I know that. He'd been there quite a while. But I believe he lives in Phoenix, actually. But he was a Lucas aficionado, but I didn't know if you knew him or not. But I'm going to get in contact with him, and maybe he could come on as a guest sometime. But please go ahead, Stan. I'm sorry, my mind triggers off certain things, and I forget to bring him in order. So please continue.
Lucas numbers are something that are probably not well understood or that well known. But I found them to be just exceptionally powerful tools in defining turning points. I find them much more powerful than Fibonacci themselves, but I use both. Here's a chart of the S&P. I ran this off 12:30 today here on the East Coast. And what I just through an iterative process found the Lucas number 123 seems to be doing a dandy of a job of defining the pattern. If I take the October 13th low of last year and I add 123 Lucas trading days to that date, it lines up with April the 12th. And that comes pretty close to some of the prior charts that I showed you about a potential trend change that first/second week in April. So I think there's a good chance we could rally into that time period. Now look at some of the lows. We had a low in early, I didn't mark this on the chart, but we had a low in early November. That corresponded with 0.146 Fibonacci ratio. We had a low in December. That corresponded with what I've shown on the chart, the 0.382. And the low we had yesterday corresponded with 0.764. The high we saw back on February the 2nd corresponded with 0.618. And these are within a day or so of the ideal turns. Projecting forward in time, it suggests the potential for a trend change in the vicinity of April 12th, plus or minus. So wow. I think I'll be looking at that time period for what could be a potential high. Then we have one last chart here, Larry. This is back to the New York Composite Index, same time period. And what I've done here is I've shown the low last October and then another low on the weekly chart that I think will occur in the middle of June. That time span is about 170 trading days, 34 weeks, 8 months. That's those last two numbers are fib numbers, of course. And that time period is what I call the primary weekly cycle. And it is the dominant chart on the weekly chart, the dominant cycle on the weekly charts. And I wrote an article about it for the Cycles magazine last year. Well, each 34-week primary cycle is usually composed of 4 separate and distinct trading cycles. And you can see on the chart here of the New York Composite, I've marked 1, 2, 3, 4. The first one was approximately 47 trading days from low to low. Actually, it was 46. 47, of course, is a Lucas number. The second one was 49 trading days, which is within 2 days of, again, Lucas 47. And I'm theorizing the next one will occur approximately 22 days, trading days from yesterday. So that's Lucas 11 times 2. So should the pattern continue? We'll have to see. But right now, it's the time period is first, second week in April. Say 5-6 weeks from right now, as you and I speak, looks pretty interesting for what could be an important pivotal high. And I'll be watching it.
I've just penciled you in for those dates, my friend, so don't go on vacation. Hey, listen, thanks for joining us.
And if it doesn't, we never had this conversation.
Absolutely. You know, we blame it on somebody else, like with moving averages or something. That's what I do. I always have someone in the wings there that I can, shift the responsibility to. Listen, we'll have you on, though, Stan, again, long before that, but I'm going to pencil you in there for around the 12th of April. We'll have you on a few times before that. But thanks for joining us today. I know you got a really busy schedule, so we'll let you go. Tell the folks how they can reach you. Just give them your email address, or the website would probably be the easiest, I think.
Oh, yes. I'll put it right back up again. Here it is, right here. There's my contact info on the screen for folks.
Okay, it's got everything in there that you possibly...
Got everything on there, yes.
Yeah, and who's that handsome guy by the screen there? Is that you by any chance?
Hard to tell. Yeah.
Hey, listen. Hey, thanks for joining us, Stan. I really enjoyed chatting with you, and we really wish you were here and enjoying this cold weather that we're having, because it's warmer where you are than it is here. So it's pretty amazing to be in March, to be 29 degrees last night. Shut the front door.
Well, that's Tucson in the high elevation. Yes.
Yeah, well, at 2,500, well, the mountains behind me look like Switzerland, but boy, oh boy, it's really, we're not used to this cold weather for sure. But thanks again for joining us, and we'll have you on again really soon, okay?
Absolutely, Larry, my pleasure.
Okay, you bet. Okay, folks, what we got is a market that is still acting very, very strong. We're up about 300 points almost in the Dow Jones, 50 handles in the S&P, and we're up 160, 170 in the NASDAQ. All of them are looking, really, really positive to the upside here. And we're going to continue to see if these things keep going the way we think they're going. We know a major bottom was made here, a few days ago. There's no question about that. And the reason for that is I wanted to bring this up and show the folks here. This is the daily. I wanted to get this up because I got trapped into that situation of thinking, that was going to be a low that didn't hold, and by golly, it held. It only went 18 points below the exact Fibonacci number, and then, of course, it turned hello, operator, yesterday, and you can see that's where we are now. We're back up into this area, so we're going to have we've already had a really good rally. We're already 100 handles off the bottom, and it's only been 36 hours. So we're probably heading up a lot higher would be my guess. That's for sure. Now the Dow Jones just a little while ago, just made a 382 retracement of this high that we made way back here. So that could be important, but maybe not. We're going to find out. Stay tuned, folks. 877-927-6648.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, I'm going to give you a heads up of some of the things that we're going to be talking about when I do the day trading thing on March the 8th, next Wednesday, which happens to be a full moon, which means we're probably going to have a little bit more volatility than usual, if that's possible. But the things that I basically use to try to determine where to buy or sell, I've been working on for a long time. There's the standard deviation, of course. It's really how the options market works. I look at the opening price. I try to trade in the direction of the opening price. The only time I don't do that is when I have a perfect ABCD or a 1-3-5 pattern. I watch the harmonic numbers because that's how I focus on the risk that I'm dealing with. I know that risk on my S&P trades are going to be somewhere between $500 and $750, $7 in gold, $1,000 in crude oil. In soybeans, wheat, and corn, is usually around $350 to $500. And then also the market statistics, and that's a very, very important because that's how these algorithmic traders move, and those are part of the Fibonacci summation sequence, also part of numbers of sacred geometry. the numbers 1, 2, 3, 4, and 5, and the square roots of those numbers, and that's why you see these markets turn on a dime at those points. And if you're aware of those, it gives you a really, really good edge, folks, because then the amount of money that you have to risk there is extremely small, and that's really what the whole ball game is about. So let's remind ourselves of that. We've got 2 hours left of the trading day. I imagine we're going to close somewhere around that 40, 43 area, at least up into that area, and we'll find out whether the market is still going to get to those levels. We'll have to wait and see. Just keep an eye on the Dow Jones Industrial Average, folks, because at 3320 today, 3,320, it made a 382 retracement of the high that we made a very, very long time ago, which was back on February the 13th. So we'll see you on the flip side tomorrow, folks. Live every day in an attitude of gratitude, and may God bless.